Hello friends, I am Pradeep. I'll be talking about our technical outlook on the market. Last week turned out to be an extremely good and important one as benchmark indices not only registered their highest weekly gain in more than 20 months by surging 5.2% but also decisively crossed key resistance levels on daily as well as weekly charts. The week started on a cautious note as Nifty closed marginally lower on Monday compared to previous day after touching a low of 5348. However, the benchmark reversed the trend from Tuesday and the northward journey accelerated as the week progressed and reached its pinnacle on Friday when Nifty jumped 2.4% to finish the week at 5654, gaining a hefty 282 points or 5.2% week on week. The near term as well as the medium term view on Nifty has turned bullish after last week's move. As can be seen from the weekly chart, after Nifty broke the previous bottom of 5937 in November 2010, a bearish lower top lower bottom formation was in place. Now this is the weekly chart of Nifty and this is the bottom of 5937 which was made in October 2010. After Nifty broke this bottom in November 2010, a lower top lower bottom formation was in place. Subsequently, the benchmark plunged all the way to 5177 on 11th February 2011. Now to turn the medium term view decisively bullish, a higher top higher bottom formation was required on the weekly chart. The first requirement got fulfilled in February itself when the benchmark made a higher bottom of 5232 on 25th February. Now again coming to the weekly chart, this is the bottom of 5177 which was made on February 11th. Subsequently, Nifty rallied till 5599 and again plunged all the way to 5232. But here it made a higher bottom than this, fulfilling the first requirement of higher top higher bottom formation. The second requirement of a higher top got fulfilled last week on Friday when Nifty closed above 5599 and 5608, the previous tops on weekly chart. Now these two are the previous tops on weekly chart. This is 5599 and this is 5608. After making higher bottom here at 5232, a higher top formation, a higher top requirement also got fulfilled last week when on Friday Nifty closed above these two tops. In doing so, the benchmark also crossed couple of other important resistances on the daily chart, that is 200-day exponential moving average, trendline adjoining 5599 and 5608 and upper band of the Bollinger Band. Coming to daily chart, last week Nifty also crossed couple of important resistance here. As you can see, this is 200-day exponential moving average that got decisively crossed on Friday. The trend line adjoining these two tops that also got crossed, and also as you can see here, the upper band of the daily Bollinger that also got crossed decisively on Friday. What now? After a mammoth 5.2% rise in one go, it is possible that the benchmark witnesses some sort of profit booking in the days to come. But that pullback should be seen as an opportunity to buy in light of the above mentioned observations. Now, where the support on the downside comes, the retracement level of this rally from 5348, which is the bottom made on 21st March, to the top of 5667, which is the top made on Friday. If you see this rally and take retracement of this rally, the first support comes around 5545 and the second support around 5507. So these are the support levels to watch out on the downside. On the upside, the meaningful resistance would come only around 5900, which is the 61.8% retracement level of the whole 63385177 fall. Now this is the weekly chart of Nifty, and if you take the whole fall from 6338 to 5177, the 61.8% retracement level comes around 5900, and that is the level to watch out on the upside. With this we conclude the technical outlook. Thank you.